Bismillahirrahmanirrahim. Assalamu alaikum. In our today's video, we are going to discuss the classification of assets and liabilities with maximum examples. So everyone can easily understand either it is a liability or either it is an asset. So let's discuss without wasting any time. There are only two types of assets. One is the tangible assets, which have physical existence and can be seen or touched. The second is intangible assets, which have no physical existence like goodwill, patents and copyrights, etc. Types of tangible assets. There are three types of tangible assets. One is the fixed assets, long-term assets, and the current assets. Let's discuss one by one with maximum example so everyone can understand easily what are the fixed, long-term and the current assets. So we can distinguish between each other. The first is the fixed assets. A fixed asset is a long-term tangible piece of property or equipment that a firm owns and uses in its operations to generate income, like plant and machinery and building, furniture and vehicles. Note, all fixed assets are subject to depreciation. These all assets are depreciable. Let's discuss now long-term assets. These are the assets of the business that are receivable after 12 months of the balance sheet date or of an accounting period. For example, if a business has invested some money for 2 years in any saving scheme or has purchased saving certificates for more than 1 year, it is a long-term asset. For example, stocks, bonds, shares, investment made in other companies and getting profit. So these are the examples of long-term assets which are more than 2 years, and we are getting benefit from those assets. Note, long-term assets are not subject to depreciation because we are not using ourselves in our production. Let's discuss now current assets. Current assets that can be converted into cash within one accounting period. There are multiple ways these assets can be converted by sale. You can sell that asset and convert into the cash, or you can consume, you can utilize, and exhaustion through standard operations. Let's discuss the examples cash and cash equivalents. Like currency, you have hard cash, checking account balance like bank balances, treasury bills, and short-term government bonds. If the maturity date of these bonds are 3 months or less, so those will be considered as cash and cash equivalents. The next, marketable securities, short-term investments that are expected to be converted to cash within 1 year. Examples include certificates of deposit, money market accounts, and high yield saving accounts. These are the marketable securities. The next is accounts receivable, any money owed by customers for purchases made on credit. So the account receivable, we are selling goods on credit, so those are our account receivable, are under the current assets. Inventory and supplies, raw material, units in production and finished goods are all our inventory. Prepaid expenses like expenditures paid for within one accounting period, but we use in future period, that expense benefit we use in the future period. Like example include prepaid rent. The rent if we are paying in December 2019 and using its benefit in January, February, March till November, so it means it is a prepaid rent. We paid in 1 year and we are using the benefit in the second year. Please note one thing, that the year in which long-term asset is expected to be received or finalized, then long-term asset is transferred to current asset in that year. Next, we will discuss the liabilities now. Current liabilities. These are the short-term financial obligations of the business that are payable within 12 months of the balance sheet date. Examples includes accounts payable, a short-term debt obligations to its creditors and supplies, that we are receiving some goods on credit and we have a payment terms with them like 30 days, so we will pay them after 30 days. So these are the short-term debt obligations which are called accounts payable, will be recorded under the current liabilities. Accrued expenses, cost of expenses that are recorded in accounting but have yet to be paid. For example, a supply purchase from a vendor but have yet to receive an invoice to pay it. The supplier, he didn't submit out the invoice, so we are going to pay him after few days or after 30 days when he will be submitting to us an invoice. So these are our accrued expenses. Tax payable, like income or sales taxes out to the government that have yet to be paid. These are also our current liabilities. Short-term debt, typically the amount of debt payments owed within the year. So those are short-term debt also recorded under the current liabilities. Payroll liabilities, these liabilities can include Medicare payments, withheld for staff, employees' benefits such as retirement plans, contribution or accrued payrolls. Dividend payable or dividends declared. The dividends declared by a company's board of directors that have yet to be paid out to shareholders get recorded as current liability. Unearned income or unearned revenue. The money received or paid to a company for a product or service that has yet to be delivered. We have received some money from a customer, but the product is not yet delivered, so that is also our current liability. Now let's discuss long-term liabilities. It is an obligation that will become payable after a period of more than 1 year of the balance sheet date or of an accounting period. Examples includes bonds payable, more than 1 year lifetime, so those will be as a long-term liabilities. Long-term loans, we have loans from the banks for 5 years, so those are also long-term liabilities. Pension liabilities, we are paying pension to the employees, so that is very long, so those are also long-term liabilities. Post-retirement healthcare liabilities, deferred compensation, deferred revenue, and deferred income taxes. And at the last, there is customer deposits. Customer deposits for more than 1 year are also our long-term liabilities. Remember one thing, guys, the year in which long-term liability is to be paid back, long-term liability is transferred to current liability in that year. Suppose we are going to pay a long-term loan and the loan terms were for 5 years, and on the 5th year that loan will become as a current liability, not long-term liability. I hope guys you like our today's video. Please subscribe our channel so we will make more videos for you. Thank you very much and goodbye.